Good morning, everyone. This is Charalambos Pissouros, senior analyst at IronFX, bringing you the morning comment for the 18th of November. Yellen reignites the USD rally. Fed Chair Yellen maintained a neutral to slightly hawkish tone during her testimony before the Joint Economic Committee of Congress yesterday, amid a barrage of questions from lawmakers regarding the Fed's future actions in the face of potential fiscal stimulus. When asked about the market moves after the election outcome, Yellen replied that markets have indeed been moving in anticipation of a massive fiscal package. Such a package, she added, could have inflationary consequences, which the Fed would have to take into account when devising policy. While these comments would normally be considered hawkish, the Fed chief also indicated that there is a great deal of uncertainty associated with the upcoming government's policies. In this regard, the FOMC will be watching the decisions of Congress and will update its economic outlook as the policy outlook becomes clearer. As we noted yesterday, the fact that the Yellen kept alive the scenario of faster rate hikes in the future was enough to reignite the greenbacks rally, with the dollar index skyrocketing once again to reach levels last seen in 2003. Given these signals, we expect this rally in the dollar to continue for a while as investors price in even more rate hikes by the Fed over the next years. We would thus treat any short-term pullbacks in the dollar as corrective moves of the currency's broader uptrend. Our favorite proxy for further dollar strength is dollar yen. The fact that the Bank of Japan has begun to implement its yield management policy to keep yields on longer-dated Japanese government bonds at 0% suggests that the G10 currency, which is likely to depreciate the most against the greenback, is the yen. To explain, the US election outcome has led to a sharp increase in US Treasury yields, which has spilled over into higher bond yields of other G10 nations too, but to a much lesser degree. This has been the main factor driving the dollar strength. Therefore, given that the Bank of Japan is the only G10 central bank actively keeping a ceiling on its nation's bond yields, we expect the yield differential between US Treasuries and Japanese government bonds to widen by the most, thereby causing the yen to be the biggest underperformer against the dollar, at least among the G10s. As for today, during the European day, we have a relatively light calendar in terms of data releases. The most noteworthy indicator due to be released is Eurozone's current account balance for September, though no forecast is available. From Canada, we get CPI data for October. The headline rate is expected to have risen, while the core rate is forecast to have held steady. The nation's IV PMI for October supports that prices rose faster than previously, as the price sub-index surged to 61.5 from 56.8 in September. Following the latest Bank of Canada policy meeting, Governor Paulos indicated that officials actively discussed the possibility of adding more stimulus. What's more, at the time the bank considered the risks to the profile for inflation as roughly balanced, albeit in a context of heightened uncertainty. Thus, we believe that any acceleration in price pressures is likely to ease some of this uncertainty, thereby lowering the probability for any further easing by the bank. This could extend the loonie's latest gains. We have 4 speakers scheduled for today. From the ECB, we will hear from President Mario Draghi and Governing Council member Jens Weidmann. As for the FOMC, Kansas Fed President Esther George and Dallas Fed President Robert Kaplan will speak. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, senior analyst at IronFX, wishing you solid trading.